Hi everyone, welcome to the webinar and workshop series conducted by TCS in lieu of the upcoming SCS exams happening in August 2025. My name is Nick and I'm the lead tutor and evaluator for SCS at TCS. So let's look at the session plan. First things first, I'm going to take you through a 3-week study plan because if some of you might be pondering about starting preparations, so if you are one such individual, you need not worry, you still have time to get everything done within 3 weeks. So with that in mind, I will be sharing a 3-week study plan with you. And then, most of you who had invested on premium, you guys have, started attempting mock exams. So most of you are done with mock exam 3, which is extremely good. Which indicates the fact that you are sticking to our original 8-week study plan. So I've gone through mock number 3, and based on what I've encountered, the type of shortcomings I've encountered when marking your papers, I will be sharing general feedback with you. And also, most importantly, I will be taking you through the F3 syllabus in this workshop, and then I will take you through the question and answer, which is taken from SCS Mock 1, Section 3A, in which I'm going to take you through a question tied to your F3 syllabus. And as usual, at the very end of today's workshop, I will be conducting a Q&A. If you have any questions, you can get them addressed instantaneously. All right, so that's the session plan. So before we get into the technicalities, let me quickly remind you of the upcoming workshops we have scheduled for you. So similar to what I'm going to cover in today's workshop, I will be taking you through your P3 and E3 syllabi, and at the same time, I will be taking you through mock exams concerning these two pillars. And at the final workshop, which happens just 2 or 3 days before your examination, I will be sharing last-minute tips with you to make sure that you have the capability of walking into the exam with a high level of positivity. Because as per the CIMA examiner, if you believe in yourself, if you believe in your skill set, then you can surely pass this exam. So make use of these workshops and attend them without fail each week to gain an understanding of how each pillar is tested at your exam. And at the same time, this is the best way to keep tabs about your performance on a weekly basis. And if you have any questions or concerns, you can get them addressed in each of these workshops. Having said that, let's direct our attention towards the 3-week study plan. You have to kickstart your preparations by watching the pre-scene analysis videos because it's essential that you gain a good understanding of what appears within your pre-scene concerning Leothayre's industry dynamics, internal dynamics, and what appears within the financial statements. After gaining a good understanding of the pre-scene by watching the pre-scene analysis videos, then watch the recorded version of the third webinar, Answering Technique, in which I taught you answering and time management techniques. If you had already attended it live, or if you had watched the recorded version, you need not watch it once more. But if you're clueless of what this webinar is all about, it's essential that you watch it before you start preparing for your mock exams. So watch the webinar and then attempt mock number 1 via the exam platform, which is the best way to master your answering time management and stress management techniques. And once you're done with mock number 1, you need not actually conduct any revision focused on mock exam 1, because mock 1 is to get your bearings with the answering time management and stress management techniques. Also, via the webinars and the workshop series, I will be covering the answers of mock exam 1. So that's why I don't want you to conduct revision focused on mock number 1. Simply attempt it to see where you stand as a student with regards to your answering time management, fine-tuning your answering time management and stress management techniques. And then after you have watched mock number 1, attempted mock number 1 rather, attempt mock number 2 via the exam platform. After you have attempted mock number 2, watch the masterclasses to learn theory and improve application. You will understand how we conduct masterclasses and what is covered within our masterclasses in a little while when I'm taking you through today's mock exam. And after you have learned theory and application by watching these masterclasses, your preparations should not stop there. You need to instead take steps to conduct revision. And the best way to revise is to redevelop answer plans. So again, in a little while, you will see what answer plans are. So you are supposed to, when conducting revision, rather than wasting time to go through your past notes or study texts and then trying to figure out application on your own. Simply focus your attention towards redeveloping answer plans, because if you are capable of replicating TCS's answer plans, then you need not worry about how much you are going to score at your real examination. So conduct revision focused on mock exam 2. So within week number 1, you have to complete 2 mock exams, and within week number 2, you have to attempt the 3rd mock exam via the exam platform. After you have watched it, watch the master classes to learn theory and improve application, and then redevelop answer plans to figure out whether you have learned something via the master classes, and to figure out whether you are capable of replicating TCS's answer plans. And you will also receive tutor feedback for mock number 3. So after receiving tutor feedback, then if you feel that in certain subtasks your performance was substandard, focus your attention towards redeveloping answer plans focused on these subtasks, which we'd highlight within the feedback which we share with you. And similarly, focus your attention towards attempting mock number 4, watch the master classes and redevelop answer plans. So you need to stick to a similar approach in week number 3 as well, in which you are supposed to attempt mocks 5 and 6. And if you stick to this process in the exam week, you need not attempt any mock exams, you need not watch any master classes or redevelop answer plans. Instead, it's simply a matter of referring to the answer plans which we have shared with you concerning mocks 1 to 6. So refer to these answer plans. When you are referring to these answer plans, it's as if you are covering the entire syllabus just 2 or 3 days before your exam. And at the same time, it's as if you are reminding yourself or reworking your application skills, or reminding yourself about how to structure your answers, how to work on application. And that's the best type of revision you have to be involved with closer to the exam. And reread the annotated pre-seen one last time, thereby reminding yourself about what appears within your pre-seen document. And after doing all these things, you are supposed to stop work 2 days prior to the examination. So if you are supposed to attempt your exam on Wednesday, you have to stop all your preparations ideally by the day end of Sunday. Take a break on Monday and Tuesday because it's essential that you rest both mentally and physically, which will ensure that you are calm and composed at your examination. As per what I highlighted in last week's webinar, in which I shared stress management techniques with you, I said that most students are stressed before the exam. Because of that, they are stressed during the exam. So you are supposed to take steps to get rid of these unnecessary stressful situations, unnecessary anxieties before your examination. That's why it's essential that you stick to the study plan. And if you stick to the study plan, you are completing everything. And at the same time, you will have enough time to rest before the exam, because if you're not stressed before the exam, you won't be stressed during the exam as well. So I want you to stick to the study plan, stick to the 3-step process focused on each mock exam. Practice your answering, time management and stress management techniques while attempting each mock exam. And then you can easily learn theory and application and how to structure your answers when you're watching master classes, which is the 2nd step. And the 3rd step is to revise your knowledge by redeveloping answer plans. So if you stick to this process, once you're done with all mock exams, you will see a significant improvement in your skill set. And if you have taken steps to improve your skill set, then you need not worry about how much you are going to score at your real examination. You will easily pass this examination. So that's the 3-week study plan. And after this session, I will share this via the WhatsApp group as well. All right. So having said that, let's try to figure out what your shortcomings are. So as I mentioned earlier, I went through your mock number 3. As well as I've gone through mocks 1 and 2 as well. And these are the shortcomings which I identified by marking your papers. So the biggest problem is the fact that you are deflecting from the requirement. So this happens mainly due to the fact that you tend to misunderstand the requirement in certain subtasks, because unlike the MCS exam, at the SCS exam, the examinee is not going to be direct. For instance, if your knowledge concerning the SAF framework is tested, the examiner is never going to mention the SAF framework. Instead, the examiner is going to say, evaluate this strategic option. So it is your job to understand, okay, when I'm supposed to evaluate a strategic option, I'm supposed to utilize the SF framework. So it's your responsibility to understand which tool you are supposed to use whenever the examiner is testing your theory knowledge. Similarly, if the examiner wants to test your understanding about the Mendelow's matrix, the name or the theoretical concept will not be named within the section. Instead, the examiner is simply going to say, come up with strategies to manage the stakeholders. So when it comes to managing stakeholders, you are supposed to utilize the Mendelow's matrix. So that you should have possessed the capability to understand which theoretical concept you should use concerning each and every requirement. Similarly, if it's a question to do with risk management, then you should know that first things first, we have to categorize each risk concerning the impact and probability, and after impact and likelihood or the probability. After we have categorized the risk, then we have to come up with appropriate mitigatory strategies as per the TARA framework. So likewise, you need to know which conceptual frameworks should be utilized, and the examiner is never going to mention which tool you are supposed to utilize. So that's the main difference between the MCS and SCS exams, because at the MCS exam, if your knowledge concerning investment appraisal is tested, you will know the fact that your investment appraisal related knowledge is tested, because the examiner will share certain investment appraisal models such as net present value calculations, the IRRs and the ARRs will be shared with you. So then you'd know, okay, I'm supposed to utilize my knowledge about investment appraisal. But in this exam, things are quite different because application skills are heavily tested. So if you misunderstand the requirement, then you will end up getting extremely low marks at your exam. So with the intention of making sure that you gain a clear understanding of each requirement, as I mentioned in the third webinar, answering technique, you are supposed to reiterate each requirement in your own words in a concise manner. Or in other terms, you are supposed to simplify each requirement in your own words. So I highlighted how to do this in the third webinar. Let me quickly tell you how we are supposed to achieve this as well. I'll explain this right now. So if you look at this subtask, recommend with reasons how we should finance the initial escrow setup and integration cost of $200 million and the annual escrow management fee of C dollars 5 million. So when you're, before you develop the answer plan, you are supposed to simplify this requirement. And when you're simplifying this requirement, you are supposed to do it in this manner. So I've simplified the requirement as how to finance IS investments. So there are two investments considered in this question: escrow setup and integration cost, as well as an annual escrow management fee. So these are the two investments. So I've simplified the requirement as how to finance IS investments. So when you simplify the requirement, you can easily gain a good understanding of what you are expected to achieve when developing your answer. Then you will not misunderstand the requirement. And at the same time, whilst developing the answer plan, you can always check and see whether you are developing an answer which is aligned with the requirement, because you have a simplified requirement at your disposal. So it makes your life easy to figure out whether your answer is aligned with the requirement or not whilst developing the answer plan. So in order to make your life easy, you are supposed to simplify the requirement. If you do so, you can avoid this first problem. Thereby, you definitely have the ability to develop answers which are 100% aligned with each requirement. And when going through your answers, I figured out that there are significant knowledge gaps concerning theoretical concepts, especially when marking papers of students who are coming through the exemption route. I encountered the fact that certain theory areas, either you are clueless about theory areas or you are struggling with application, because in certain subtasks, I saw that some of you have taken a lot of time to explain conceptual knowledge or theoretical concepts, but that's not what you are expected to achieve at this exam. Always remember, you are playing the role of a senior finance manager. So as an SFM, you are supposed to suggest actionable recommendations to your board members And whenever you are conducting an evaluation, it's not your job to explain theories, because your CFO or any board member is not interested in learning theoretical concepts. Instead, the CFO or any board member wants to understand the type of suggestions or evaluations you can provide with the intention of overcoming some type of a problem the company is facing at the moment, or with the intention of exploiting an opportunity at their disposal. So you are supposed to be direct. So don't try to overly explain theoretical concepts, because you are not going to get any marks for it. Because always just think that, what if you are the CFO? What if you are one of the board members and one of your subordinates are, sharing a response with you, which carries a lot of technical jargon, which adds no value or which does not address the requirement. So you are, asking someone to come up with risk mitigation related recommendations, but someone is explaining about the TARA framework. So if you're the CFO, if you're looking for risk mitigation strategies, when someone is explaining the TARA framework, you'd be pissed. So you'd end up, sacking these individuals. So at this examination, if you want to pass, you need to make sure that you develop answers which are not overly conceptual. Instead, address the requirement at hand in a practical sense. So you'd understand how to do this in a successful manner in a little while when I'm taking you through today's mock exam. So if you have knowledge gaps, as I've mentioned throughout this webinar and workshop series, you cannot pass this exam. You have to take steps to attempt all our mock exams, because we have made sure to cover all syllabus areas when developing these mocks. Then you are not testing your luck at your real examination. You will understand how each theoretical concept can be tested at this examination. So it's essential that you start attempting all mock exams. And at the same time, the best way to figure out application is to watch the master classes and then to take steps to redevelop answer plans, because we have developed these master classes with 3 objectives in mind. Objective number 1 is to take you through the logic of each answer. Objective number 2 is to teach you the theoretical concept covered within each mock exam. And objective number 3 is to explain application skills. So you need not learn theory and then try to figure out application on your own by watching these master classes. Simply, in one single video, you will learn the relevant theoretical concept and how to work on application. And you are not supposed to stop your preparations there. After watching the master classes, you are supposed to revise by redeveloping answer plans. And once you redevelop answer plans, you will remember how to work on application at your real exam in a successful manner, and how to approach each theoretical concept in a successful manner as well. So these are 2 of the shortcomings which I encountered when marking your papers. You can fix these problems after you have watched the master classes and taken steps to redevelop answer plans. And in certain subtasks, you have not included the specific number of points. In some subtasks, your answer is too long. And in certain subtasks, you have simply mentioned just a single point or 2 or 3 points. So in order to avoid this, I explained what you need to do to understand how many points you need to include in each subtask. I explained these things in depth in the 3rd webinar. So I'm going to reiterate the same information, because I feel that some of you might not have adhered to these guidelines, or some of you might have missed the 3rd webinar. So you are supposed to determine mark allocations based on the weightages provided. So in here, you can see for subtask A, the weightage provided is 50%. And as you know, in total for for a certain section, in total 50 marks are dedicated. So 50% of 50 marks come up to 25 marks in total. So in order to score 25 marks, you need to come up with a certain number of answer points. So in order to determine the answer points, what you are supposed to do is you are supposed to divide 25 by 3 and again divide 25 by 2. So if you divide 25 by 3, it comes up to something like 8. And if you divide 25 by 2, it comes up to something like 12.5. So if you develop 8 to 12 valid points in this answer, you will get full marks. So that's how we are supposed to determine how many points you need to include based on the weightages provided. If you stick to this methodology, you are making sure to develop answers which are totally aligned with mark allocations. If so, your answer is not going to be too long or too short, because as I mentioned in the third webinar, the marker is looking at the quality of your answer, not the quantity. So it's essential that you gain an understanding of how to determine the number of points you need to include under each subtask based on the weightages provided. So keep practicing this technique whenever you are attempting a mock exam. And once you're done with 2 or 3 mocks, you will get your bearings with this technique. So do this with the intention of ensuring that you develop an answer which is totally aligned with the weightages provided in each subtask. And I also encountered issues with expanding the answer plan, probably due to the fact that you ran out of time, or especially towards section number 3, probably due to fatigue setting in, you might have given up the mock exam halfway through. That's why I saw parts of the answer plan which appears within your final answer. So when it comes to developing your answer or structuring your answer, you are supposed to stick to, so you are supposed to develop something like this, or develop an answer plan or an answer skeleton like this. But your final answer should look like this. It should be in paragraph form. There should not be any bullet points or single line sentences. As you can see throughout this document, everything is in paragraph form. So this is how your final answer should look like. But when marking your papers, I saw that probably due to you running out of time, you had paragraphs. On top of that, I saw parts of the answer plan as well. You are not going to get any marks if you provide answers in bullet points or single line sentences. So you can avoid this problem by practicing the answering technique which we taught you in the third webinar, because it takes some time for you to get your bearings with the answering technique. And once you're conversant with this technique, you will have the capability of developing answer plans within just 30 minutes and expanding the answer plan in paragraph form within just 25 minutes in each section. And as I mentioned earlier, time management appears to be a problem. You are still in mock exam 3, so it's quite all right. You will definitely run out of time because you might still be getting your bearings with the answering and time management techniques which we taught in webinar number 3. That's quite all right. Keep practicing, because compared to what you experienced in mock number 1, I feel that your time management has improved, since you have practiced the time management technique across 3 mock exams right now. And by the time you're done with all 6 mock exams, you will understand or you will gain the capability to develop answer plans within 30 minutes and then expand the answer plan in just 25 minutes. So that's the feedback which I wanted to share with you. I hope these are the main problems you encountered as well when attempting mock exams, and I hope you understand the steps you need to take to avoid these shortcomings when conducting preparations in your upcoming mock exams. All right, so having said that, let's have a glimpse at your F3 syllabus and which knowledge areas can be tested. So yes, looking at the F3 syllabus, yes, what appears within your F3 syllabus, all areas can be tested. So as per your F3 syllabus, finance strategy related knowledge will be tested at your exam. So you need to be conversant about financing options, the differences between debt and equity, because your board members are going to seek your guidance when opting for long-term financing. So in today's mock exam discussion, I'm going to take you through a question tied to financing options. This is an exam type question which tests your understanding about long-term and short-term financing options. So as a senior finance manager, you should not only be conversant about long-term financing, you have to be conversant about short-term financing options as well. And then your knowledge pertaining to demonstrating creditworthiness to lenders, what to cover when demonstrating creditworthiness when opting for loan finance or debt finance will be tested at the exam. and you should have an understanding of how to handle a rights issue, because when opting for rights issue, it's essential that we take steps to make sure that shareholders end up buying their rights. If not, our share price will drop in the short term, as well as if our share price, if our rights are undersubscribed, then our long-term share price will keep depleting as well. So in order to avoid all these type of shortcomings, there's a proper way in which you should handle a rights issue. Then how to deal with debt covenants when opting for additional debt. If you had gone through mock exam 1, you know what I'm talking about, because in the second subtask, which appears within section number 3 of mock exam 1, there's an exam standard question tied to debt covenants. So there's a way in which we should deal with debt covenants when opting for additional loan or debt financing. So these areas can be tested. Then you have to be conversant with how to conduct company valuations. It could be a small company or a large company. So when valuing each type of business, you should have the capability of understanding how to do this in the most successful manner. Then what to do or how to handle additional dividend payments, how it impacts our financial statements, how to find the cash, all these things, how to conduct evaluations in the most successful manner. All these things will be tested. And how to cancel a dividend, how it impacts shareholder confidence, stakeholder relationships, and how it impacts our internal dynamics, and how it impacts us financially. These areas can be tested. And your knowledge concerning integrated reporting or the 6 capitals framework will be tested, especially given the fact that this time's pre-scene is based on a company which is contributing to environmental pollution. We are not believing in sustainability as per the pre-scene document. There's no mention about sustainability. So because of that, definitely the 6 capital framework can be tested, because if we conduct our reporting initiatives covering these 6 pillars, then it will lead to better stakeholder relationships, which in turn will impact our reputation and operations in a positive manner, especially given the fact that we are operating in an industry which is polluting the environment. And risks versus share price, you should have the capability of understanding how various different risks, if they materialize, how it will impact our share price, and the type of steps which we need to take to safeguard or manage our share price. And whenever we are exposed to strategic options, how it will impact our share price, this type of knowledge can be tested. And the connection between our beta and the share price, what if the beta increases, how it will impact our share price, and what if it decreases, how it might impact our share price, will be tested. Because as per your pre-scene document, let me quickly scroll to this area. Where is this? Yes, there's an indication about share price history, share price performance, and along with it, there's an indication about the beta value. So you should have the capability of understanding the relationship between this depleting share price and our beta, which is above 1. You should have an understanding of why this beta value is above 1, and the connection between the beta and the share price. So all these things are highlighted within the pre-scene as well as the mock exams which we have developed. So all these elements are covered within the 6 mocks which we have developed. So in order to get your bearings with how each of these syllabus areas can be tested at the exam, it's essential that you attempt the mock exams, and not just attempt them, watch the master classes to learn theory and improve application, and then conduct revision to make sure that you have a good understanding of how to tackle each of these syllabus areas in the most successful manner. All right, so that's your F3 syllabus. Having said that, before we move on to the mock exam discussion, let me quickly tell you what we offer at TCS. So I'm on the SCS page. Click on this button to create a free use account. Once you have created a free use account, you would gain access to our student dashboard. And once you're in the student dashboard, click on My Courses. And in front of SCS Free, you would see an Access Content button. Click on it. And via the Videos tab, you would gain access to the recorded versions of the weekly webinars and workshops we conduct. Under the Study Material tab, you would gain access to the SCS syllabus areas or syllabus coverage document. the SCS pre-scene mind map, and the answer plan of mock exam 1. And via the mocks tab, you'd gain access to the questions and suggested answers of mock exam 1. And via the exams tab, you have the opportunity of attempting mock exam 1 under exam conditions via our exam platform, which is the exact replica of the Pearson VUE system on which you attempt your real exam. So the best way to practice your answering time management and stress management techniques is to attempt each mock exam under exam conditions. So that is why we have given you the opportunity to attempt mock number 1 under exam conditions via our exam platform. So make use of these free resources on offer by creating a free use account. And if you are interested in investing on our paid content, click on this button and check our sample material before you invest. And if you're yet to join our SCS WhatsApp group, click on this button and join it. Via this group, you'd gain access to the commencement dates and times of information concerning the commencement dates and times of the weekly webinars and workshops. Also, we will be sharing some free resources with you. And if you have any questions or concerns, you can get them answered instantaneously via this SCS WhatsApp group. And talking about what we offer 2 packages, the essential course and the premium course. The essential course is designed for those who are coming through the CIMA general route. So since you have completed your OTQs, you have already learned your theory. It's simply a matter of improving your application when it comes to preparations. So under the essential course, you'd gain access to the recordings of the weekly webinars and workshops we conduct. 6 mock exams with suggested answers. Although this says 6 mock exams, we have developed 7 mock exams this time, because I've also considered a situation where we are going to be acquired because we are a small company. Leothayre is a small company, and this is covered within mock number 7, because I feel that this can be tested as well. So there are 7 mock exams along with suggested answers, and we have made sure to cover all syllabus areas which can be tested at your exam via these 7 mock exams. You will also gain access to pre-scene analysis videos. Don't try to decrypt the pre-scene on your own. Simply watch the pre-scene analysis videos. Then you'd understand about what happens within your company, its industry, and what appears within its financial statements. You'd also gain access to the annotated pre-scene industry and financial analysis slides. Let me quickly show you these documents. So this is what a typical annotated our annotated pre-scene rather looks like. So as you can see, we have summarized the entire pre-scene, and at the same time, we have explained the problem exam scenarios which can be tested, and we have also indicated the syllabus areas which can be tested as well. This is the best way to get an in-depth understanding of what appears within your pre-scene and how your knowledge can be tested. So we have made sure to cover all these elements when developing our mock exams. And talking about the industry analysis slides, these set of slides are divided into 4 main parts. In the first part, we have defined your industry. And in the second part, we have explained about the competitive landscape. And in the third part, we have explained about industry trends, at your exam. Based on these industry trends, scenarios can be thrown at you. And towards the very end, concerning 2 real-life companies, we have explained how real-life companies operate within your chosen industry. And similarly, we have evaluated the financial statements via the financial analysis slides. So we have evaluated the SOPL, the SOFP, and the statement of changes in equity, making sure to keep things simple so that you can easily understand what appears within each financial statement. Also, we have conducted a ratio analysis, thereby comparing your company's performance, Leothayre's performance, against its closest competitor Oberlink, so that you can easily gain an understanding of where we stand as a company as opposed to our closest competitor. So these are the resources on offer under the essential course. And you'd also gain access to the top 20 likely issue slides, which indicate the most probable scenarios which can be tested at the exam. You will also gain access to a case study familiarization kit. Once you have read through this kit, within 10 to 15 minutes, you get a chance to get an in-depth understanding of the technicalities behind your SCS exam. You will also gain access to a tutor-managed live chat and OTQ revision cards. So once you have attempted each mock exam, if you feel that you were struggling with a certain theoretical concept, or if you had forgotten, if you feel that you cannot remember a certain theoretical concept, don't waste time. Simply refer to the OTQ revision cards. In a jiffy, you are in a position to brush up your knowledge concerning various different syllabus areas. So the essential course is priced at £299. And talking about the premium course is designed for those who are coming through the exemption routes and those who had failed the SCS exam previously. So both these sets of students have the same problem. There are gaps in theory knowledge and issues with application. So with the intention of teaching you theory and ensuring that you improve your application skills, we have included some additional resources under the premium course on top of what appears under the essential course. So under the premium course, you'd gain access to the online mock exam platform on which you can attempt all mock exams under exam conditions, which is the best way to master your answering, time management, and stress management techniques. You will also receive one-on-one tutor feedback on mocks 3 and 5. So let me quickly show you the type of feedback on offer. So as you can see, we have evaluated each and every point, each and every paragraph in depth, thereby making sure to highlight your shortcomings, because the objective of seeking this type of feedback should be to understand your shortcomings, because without understanding your shortcomings, you will keep repeating the same mistakes. So this is the best type of feedback you can look out for. And also, towards the very end of this document, we have indicated mark allocations on a subtask by subtask basis. We have also indicated a success rate, and you can see that all these subtasks are highlighted in yellow because the student has only achieved 9 marks by attempting this after attempting this mock exam. But don't worry, this student was capable of achieving 86 marks when the results were out. So you might struggle when attempting mock exams. Don't worry. The objective of opting for tutor feedback is to gain an understanding of your shortcomings. And once you have understood your shortcomings, you can always fix these problems after watching the master classes, after you have redeveloped answer plans. So that's a type of feedback on offer at TCS. And you'd also gain access to the answer plans of all 6 mock exams, which makes your life easy when it comes to revising your knowledge, when it comes to redeveloping answer plans. So this is what a typical answer plan looks like. And I'm going to, when explaining today's mock exam, I will be taking you through this type of an answer plan so that you understand what these answer plans are. This is the easiest way to understand how to structure your answer, understand the logic behind each answer, and this is the easiest way to understand how to include theoretical concepts when developing your answers and to improve your application skills. And when conducting revision, you are supposed to redevelop answer plans on your own. Once you have redeveloped your answer plans, compare your fresh answer plans to TCS's to understand whether you are capable of replicating the answer plans which are akin to TCS's. If that is the case, you are not going to struggle at your real examination. So these are the type of resources on offer. And on top of that, you'd also gain access to the master classes in which we are taking you through the logic behind each answer, teaching you the theoretical concepts covered within each mock exam, and at the same time, teaching you application skills. So the premium course is priced at £849, which can be paid in 2 installments of £424 each, or if you opt to pay in full, you will save £100. If so, the price is just £749. So you can click on either of these buttons to invest on your preferred course. So having said that, let's try to figure out what you are expected to achieve within this week if you are sticking to our original 8-week study plan. So as per our study plan, we are in week number 5, and you are supposed to dedicate 9 hours of study time within this week, just like what you did in the previous week. So this week is dedicated towards mock exam 4. So let's quickly try to understand which syllabus areas are covered within mock exam 4. So when developing mock exam 4, I've considered a theme which is tied to satellite failure, because this type of a scenario can definitely be tested at the exam. Because if you look at the pre-scene, there is a mention about the possibility of a satellite failure being tested at your examination, because we are reliant on suppliers, and these suppliers are supposed to supply us with space grade components. And if something's wrong with our suppliers, then it will impact the success of our launches and the success of the way in which the the way in which Leothayre satellites will orbit and function in the OEM. So that's why it's essential that you gain an understanding of how a satellite failure related theme can be tested at your exam. Definitely this is going to be tested because it appears in one of the news articles which appears at the very end of your pre-seen document. So strategic actions versus implications, which is tied to your E3 syllabus, tied to strategy implementation, can be tested. How to react to a satellite failure. And when reacting to a satellite failure, you have to set objectives. How to set objectives when faced with a crisis. You have to set objectives in an instantaneous manner. You don't have the freedom to take all the time in the world to set objectives when we are facing a crisis. So your knowledge concerning strategic control, which appears within your E3 syllabus, is covered within the second subtask. And in the third subtask, the type of risks which were exposed to both reputational and legal. So your knowledge concerning risk identification concerning your P3 syllabus is tested in the third subtask. And looking at section number 2, how this satellite failure impacts our share price and how to deal with negative connotations. So how to conduct market communication in the most effective manner concerning your F3 syllabus is covered. And shareholder concerns, which tests your understanding about stakeholder management, how to manage stakeholder or shareholder interests, how to take steps to manage their confidence levels, is covered within the second subtask. And in the third subtask, the type of controls which we should implement to prevent satellite failures from occurring in the future. So designing internal controls, which appears within your P3 syllabus, is covered. And looking at the final or the third section, appointing a part-time executive director to provide leadership to prevent these type of issues from occurring in the future, which is tied to governance, is covered. And non-executive chair's responsibilities, whether it's accurate for the non-executive chair to disregard what the board members are stipulating. So again, something tied to governance is tested. And your knowledge pertaining to ethics, conducting the business in the most ethical manner, which is covered in your E3 syllabus, is covered within the last subtask. So if you feel that you are struggling with any of these syllabus areas, simply go through the revision cards, then attempt the mock exam. And whilst attempting the mock exam, if you struggle, that's totally fine. You can bridge your knowledge gaps and you can fix your application issues by watching the master classes, and then refine your technique, refine your understanding, refine your skill set by redeveloping answer plans. So that's what you're supposed to achieve within this week if you're sticking to our 8 weeks study plan. If not, if you're yet to start preparations, at the inception of this session, I shared a 3-week study plan with you. So you still have time. You simply need to dedicate something like 15 to 18 hours on a weekly basis in the upcoming 3 weeks. If you do so, you will have enough and more time to cover all mock exams, watch all master classes, and conduct revision, thereby redeveloping answer plans of all mock exams. All right, so that's what is on offer. Having said that, let's move on to the discussion of today's mock exam concerning your F3 syllabus. I think some questions had come through, so I'm going to pause the recording. Let's see what these questions are. I hope I addressed all your concerns, folks. So having said that, let's look at SCS mock 1, which we have developed. So I'm going to take you through a question which appears within section number 3. I'm going to direct your attention towards the first subtask. A month later, you receive the following email from the CFO. I have attached a scanned copy of a quotation that has been circulated to the board. So let's look at the quotation. So we have received this quotation from a company which is known as VSCRO, and there are 2 different descriptions in here. There's a cost which comes up to $200 million, which is tied to initial escrow setup and integration. And there is an annual escrow management fee, which comes up to $5 million. So in total, this quotation is for $205 million. And let's look at what these items or descriptions are. So escrow setup and integration, the company is proposing a customized escrow arrangement for Leothayre's satellite deorbiting technology, securing technical documentation, design schematics, and software protocols to protect intellectual property. So let's go through section number 2 to gain an understanding of what this is all about, what this new technology is all about. So I'm going to read through this reference material, which is taken from section number 2, because section number 3 is connected to section 2. During a recent meeting, our operations director briefed the board on Leothayre's successful development and testing of a proprietary satellite deorbiting technology. So our engineers has innovated, and thereby, we are in possession of a proprietary satellite deorbiting technology. So this is better deorbiting technology, which will address the space debris problem. This innovation ensures reliable end-of-life re-entry, reducing orbital debris, as I mentioned earlier, while offering a cost-effective alternative to current deorbiting systems. So our innovation is cheaper. Our deorbiting system is cheaper than what is there in the market. Unlike other models, Leothayre's design is cheaper to build and implement, even amidst rising satellite construction costs. Interest from other manufacturers has surged, with several seeking to license the technology to support their ESG goals. So, various players out there, various different satellite companies out there, they have, gotten in touch with us with the intention of purchasing this technology from us, or we are looking at sharing this technology with third parties. Give me a second, please. Someone's writing stuff on the screen. Okay, so interest from manufacturers has surged, with several seeking to license the technology to support their ESG goals. The board acknowledges the revenue opportunity and potential to reduce dependency on a limited client base, but is also mindful of IP risks or intellectual property risks and the risk of losing competitive advantage. So we can benefit from additional revenue streams by selling this intellectual property, by sharing this intellectual property, and this reduces our our customer dependency risk as well, because when we are exposed to additional revenue streams, our customer dependency risk significantly decreases. So all these are positive. However, if we do not share this technology in the most secure manner, then it will impact our competitiveness in a negative manner in the future. To mitigate this, Leothayre plans to use third-party escrow services. So that's a third party coming into play, which acts as the link between us and our customers who are looking to utilize this technology. So rather than us sharing this technology directly with our clients, we are sharing this technology via a third party, which is known as an escrow services provider. And this escrow services provider is supposed to safeguard sensitive design data along with patent protections and signing non-disclosure agreements with our clients. These measures aim to maintain control over intellectual property while enabling secure licensing and supporting long-term growth and sustainability. So this is what this technology is all about, and we are opting for an escrow arrangement. And connected to that, in section number 3, we have received a quotation from vEscrow, an escrow services provider, and these individuals are going to charge us $205 million C in total. And the escrow setup and integration includes an escrow arrangement for Leothayre satellite deorbiting technology, securing technical documentation, design schematics, and software protocols to protect intellectual property. So this escrow services provider is going to look after our intellectual property tied to this satellite deorbiting technology. Access will be granted only to licensed parties under strict legal and technical conditions. So when this escrow services provider is handling affairs, we need not worry about safeguarding our intellectual property. And there is an annual escrow management fee, which comes up to $5 million C as well. vEscrow will maintain the escrow arrangement through ongoing services, including 24/7 system availability and technical support, quarterly compliance audits to see whether all our clients who are utilizing our technology are falling in line with the agreements signed, secure updates and integration of design enhancements as and when needed, and controlled digital release of assets to licensees upon trigger conditions. So they are going to look at this licensing agreement. They are going to safeguard intellectual property. So for that, they are going to charge 200 million C dollars initially. And then each year, they are going to charge us C dollars 5 million. All right, so this is what the quotation depicts. So let's look at what your requirement is. We Escrow has an excellent reputation for the provision of escrow services. The company is based in Zealand, whose currency is the C dollar. So we are based in Wexland, but we Escrow is based in Zealand, and therefore they are utilizing the C dollar. We Escrow insists on being paid in its home currency because it is stronger than the W dollar. The exchange rate is presently W dollars 3 equals 1 C dollar. So you can see that the C dollar is extremely strong compared to the W dollar. In order to purchase 1 C dollar, we have to pay 3 W dollars. I'm interested in your opinion on these matters. Recommend with reasons how we should finance the initial escrow setup and integration cost of C dollars 200 million and the annual escrow management fee of C dollars 5 million. So let's look at how you should structure your answer. So your knowledge concerning financing options are tested in this question, which is covered in your F3 syllabus. And before you develop your answer plan, you are supposed to simplify the requirement with the intention of gaining a clear understanding of what this requirement is. And after that, whilst developing the answer plan, you can easily refer to a simplified requirement and see whether you are developing an answer which is aligned with the task at hand. All right, so let's look at how we should simplify the requirement. So I've simplified this as how to finance IS investments. There are 2 investments at our disposal. So we are supposed to figure out how to finance each of these investments. So after we have simplified the requirement, then your next step should be to understand how many points you need to include in your answer. So that is why you need to look at the weightage. The weightage provided is 50%. So 50% indicates the fact that 25 marks are dedicated for the subtask. So as I mentioned earlier, you are supposed to divide 25 by 3 and again divide 25 by 2. So when you divide 25 by 3, it comes out to something like 8. When you divide 25 by 2, it comes out to something like 12. So if you develop or include 8 to 12 valid points in this subtask, you will get full marks, or you are developing an answer which is totally aligned with the mark allocations. So that's how we are supposed to determine the points. Then let's look at how we should structure your answer. So we are in section number 3. I've come up with a main heading which goes as funding options, which is in bold and underlined format. And I've utilized 2 subheadings, focusing the attention towards escrow setup and integration cost, as well as the annual escrow management fee. I've utilized 2 subheadings which are in bold format. All right, so first things first, let's look at the total investment. In C dollars, this comes up to 205 million, or in W dollar terms, this comes up to 615 million W dollars. So how did I arrive at this $615 million figure? I simply multiplied 205 million C dollars by 3 because that is our exchange rate. So C dollar comes up to 3 W dollars. So 205 million C dollars come up to W dollars 615 million. So this is a huge investment. And let's first focus our attention towards escrow setup and integration. So as per the quotation, the escrow setup and integration comes up to $200 million in C dollar terms. So the investment is $200 million, or in W dollar terms, when you multiply this by 3, it comes up to 600 million W dollars. So when it comes to financing this investment, we have 2 options at our disposal. We can either go for debt or equity. So debt is a situation where we opt for a long-term loan, and equity is a situation where we opt to sell shares to the public. And the easiest way to raise equity as a quoted company is to go for a rights issue. So I've considered a rights issue because it's easier compared to us trying to sell fresh shares to the market. All right, so first things first, I want to direct your attention towards the elements which you need to cover, which is tied to debt or raising loan finance. So when opting for a loan, first things first, you need to think in terms of how it impacts our gearing and how it impacts our current interest cover. Because as per the pre-scene, the interest cover is not too good. Our current interest cover is 1:1. So because of that, it's essential whenever your knowledge concerning debt financing is tested or funding options are tested, whenever you are talking in terms of debt financing, you need to think in terms of the gearing and the interest cover. Okay, so these are the two elements which I've covered. So when opting for a loan, you need to think in terms of gearing and interest cover. And then you need to think about whether we can secure this loan or not, because this is a significant investment. And also you need to think in terms of the current non-current liabilities or the present non-current liabilities and compare it with the present property, plant and equipment figure. So when opting for debt funding, you need to think in terms of the gearing and the interest cover. That should be your first point. The second point is to figure out whether you can secure the loan. The third point is to compare between the property, plant and equipment figure against the non-current liabilities. So let's try to figure out how you should approach each of these elements. So first things first, when thinking in terms of gearing, we have to think about the pre-investment gearing. So as per our financial statements, our gearing is 50%, which is at the ceiling. And whenever a company's gearing goes above the ceiling, we are seen as risky in the eyes of lenders. And when lenders are lending out money to risky entities, they will definitely charge a high interest rate. When these lenders are charging a high interest rate, our finance costs will increase, which will therefore impact our profits in a negative manner. So our pre-investment gearing is 50%. And then if we consider this investment, which comes up to $600 million, W dollars in total, you are supposed to, considering this investment, you are supposed to rework the gearing calculation. When you include this additional debt, assuming the fact that we are going for debt funding to raise $600 million, when you include it to our gearing calculation, then our post-investment gearing comes up to 53% or goes beyond the ceiling. So gearing goes beyond 50%, which indicates the fact that Leothayre is seen as risky in the eyes of lenders. And when they see us as risky, when they end up lending to us, they will seek higher returns, because there's a positive relationship between risk and return as per what we have learned in your P3 syllabus. So if they are taking on additional risks by lending to us, then the lenders are going to seek additional returns. So that is why they will end up charging high interest rates, and these high interest rates will push our finance costs up. And when our finance costs increase, then our profits will decrease. And as I mentioned earlier, you should think in terms of the current interest cover as well. As per our financial statements, the current interest cover is 1:1, which indicates the fact that we are just able to meet finance costs or cover finance costs using our operating profits. Because if we are generating 100 million worth of operating profits, then our finance cost is 100 million as well, which indicates the fact that right now, presently, we are just covering our finance costs, or we are just able to cover our finance costs utilizing our operating profits. But if we take on additional debts, our finance cost will increase in the future. With this increment, our interest cover might go below 1 in the future. And since our post-investment gearing is going to be 53%, definitely our finance costs are going to increase. And when finance cost increases, our interest cover will be impacted in a negative manner. So higher gearing will increase finance costs, and this in turn will result in a situation where we are borrowing at a higher rate due to the lenders taking on additional risk on behalf of us. And when this is the case, it will impact our interest cover in a negative manner. Our interest cover will go below zero. And when this is the case, some lenders might be discouraged to lend money to us, because they can always charge a high interest. But when they know for a fact that we are not in a position to cover our finance costs or the interest component utilizing our operating profits, then some lenders might not want to take a risk on behalf of us, and they might not lend any money to us. And because of these factors, we don't have access to competitively priced debt finance. Definitely, if we go for debt funding, our finance costs will increase, especially given the fact that our post-investment gearing is going to go above the ceiling, which is 53%. Even after going above this ceiling, we can still keep the interests low if our interest cover was quite all right. But that is not going to be the case. Currently, that is not the case as well. So when this is the case, we are not in a position to negotiate terms with lenders. We will have to bow down to them. They will definitely charge high interest rates, and some of them might not lend any money to us as well, because as per our finance, our interest cover, we are not in a good position at the moment. All right, so that's about gearing and the interest cover. Then you have to think in terms of whether we can secure this loan or not. It's difficult to go for loan financing due to the nature of this asset acquired. What are we acquiring? We are investing on intangible assets. We are investing on escrow services. So whenever a lender is giving us cash or lending us money, they are always trying to get hold of some type of a tangible asset with the intention of reducing their risk exposure. What if we don't pay them on time? Then they have tangible assets at their disposal which they can take over. However, when they are lending money for an intangible asset, they can't do so. So because of that, intangible assets, when we keep this intangible asset as a collateral, it might actually discourage lenders from lending us money. Why? Because intangible assets cannot be appraised and liquidated easily, and therefore intangible assets are considered as bad collateral in the eyes of lenders. So we might struggle a bit when opting for this loan, because we are not in possession of a tangible asset. This investment is tied to an intangible asset, and these type of intangible assets, the value of these type of intangible assets cannot be appraised easily, and they cannot be liquidated easily as well. So because of that, lenders will consider these type of escrow services as bad collateral. And on top of that, looking at the setup costs, so there's an initial escrow setup and integration. So looking at the setup cost, there's absolutely no resale value, because these are costs tied to setting up this system, setting up this contract. So definitely there's no resale value. Because of that, lenders will again consider this investment as this type of investment as bad collateral. So we might struggle to secure the loan as well, given the fact that we are investing on intangible assets and lenders consider intangible assets as bad collateral. And lastly, you have to compare between the non-current liabilities of Leothayre against its property, plant, and equipment. So let's look at what appears within their financial statements. So looking at the statement of financial position, Leothayre's non-current assets in the year 2025 come up to $9.2 billion, whereas the non-current assets come up to just $4.5 billion. So there's twice the amount of non-current assets compared to the non-current liabilities of Leothayre, which indicates the fact that we have some additional non-current assets at our disposal compared to our non-current liabilities. So this makes it easy for us to negotiate terms with lenders, because our non-current liabilities is extremely low than our property, plant, and equipment figure. So when opting for this loan, rather than securing this loan against an intangible asset which is not going to work out for us, we can secure this additional debt against our existing assets, because we have some assets at our disposal which can be used as collateral, with the aim of gaining access to loan funding amounting to $600 million. So there's some additional $4.5 billion. Let me go back to this position once more. There's an additional $4.7 billion approximately in non-current assets compared to our non-current liabilities. So when we have some property, plant, and equipment, which comes up to an additional $4.7 billion, we can easily keep some of these assets as collateral when seeking for this 600 million funding option. Okay, so and if we keep our existing property, plant, and equipment as collateral to seek this loan, then it would avoid breaching debt covenants and gearing standards as well. All right, so that's everything tied to debt. Then let's direct our attention towards equity. There are various different options at our disposal when it comes to equity. We can go for rights issue, or we can go for fresh share issue. Usually companies don't opt for fresh share issues unless and otherwise the investment is extremely large. Yes, this is a large investment, but compared to how we operate as a company, this is not too large. This is just $600 million dollars. So we can easily opt for rights issue. So a rights issue, I've started my answer by explaining what a rights issue is. A rights issue is a situation where we raise money by selling shares at a discount to existing shareholders. So we are not trying to reach out to all shareholders in our stock market. Instead, we are simply reaching out to our own or existing shareholders. That's what a rights issue is all about. And when opting for a rights issue, we are supposed to sell our shares at a discount. So the current share price, if it's $4, then we are supposed to sell the share at a discount with the intention of encouraging our existing shareholders to take up their rights. And if they take up their rights, then we will gather $600 million, which will ensure that we have enough resources at our disposal to finance this investment. And if we go for a rights issue, or if we opt for equity funding, definitely our gearing will decrease. So as you know, the pre-investment gearing is 50%. And rather than going for debt funding, if we opt for a rights issue, or if we rely on equity funding, when equity increases, the gearing ratio will decrease, which is extremely good for us. However, the success of a rights issue depends on how we are convincing our shareholders. So as per what's highlighted within this scenario or the unseen, the escrow service significantly enhances the credibility of the licensing agreements, which is essential to safeguard our intellectual property when sharing our proprietary technology with a third party. And this in turn will lead to increased long-term value, because if this licensing agreement is successful, then it will expose us to additional revenue streams, and these additional revenue streams will positively impact our profitability, which will expose us to positive cash flows in the future. And therefore, it appears that it's easy to convince our shareholders when opting for rights issue. So compared to debt funding, I feel that, if we opt for rights issue, we can easily raise the necessary monies, given the fact that our gearing is too high, and our interest cover is not too good. And at the same time, we might struggle to secure this funding, given the fact that we are seeking financing for an intangible asset. Yet we do have other property, plant, and equipment at our disposal, which can be used as collateral as well. On the other hand, if we opt for equity, we can easily go for rights issue, because we can easily convince our shareholders, and it will impact our gearing in a positive manner as well. So I've not recommended anything, because your requirement is to recommend with reasons how we should finance the initial escrow setup and integration cost of 200 million and the annual escrow management fee. So I've recommended everything, but I've not said whether we should go for equity or debt, because that's not what your requirement is. You are supposed to explain everything, share all the information to your board, with your board members, and it's up to the board members to decide whether we should opt for debt or equity. And let's look at the annual escrow management fee, which comes up to $5 million in total. So the annual escrow management fee in C dollar terms is $5 million, or in W dollar terms, it's 15 million. This is a recurring expense. So each year we have to incur this cost. And whenever we are dealing with recurring expense, we have to look at our working capital. We should not opt for long-term funding to finance short-term investments. Always remember, long-term funding should be opted for when funding long-term investments. On the other hand, when funding short-term investments, we should always look at short-term funding options. So we should look at whether we can finance this utilizing our working capital. So if we opt, whenever we are opting for working capital, it will not impact our gearing, because when doing up the gearing calculation, we are considering non-current liabilities or long-term liabilities and equity, which has nothing to do with working capital of a company. So if you opt for working capital, there's no, if you finance this annual fee via working capital, it will not impact our gearing. However, if you look at Leothayre's net current assets at the moment, it's a negative $308 million. So our current liabilities are higher than our current assets. So when this is the case, we are exposed to a deficit in cash. So we don't have enough cash to finance this annual fee utilizing working capital. So the only other option at our disposal is to opt for a short-term loan. Again, a short-term loan will have no impact on the gearing, and a short-term loan can easily be negotiated by presenting cash flow forecasts to lenders. We can say, okay, look here, we need $15 million each year. However, due to us going ahead with this escrow arrangement, we are going to benefit by the licensing fees which we are going to receive from our clients, which comes up to this amount of money. So likewise, we can conduct a negotiation with the lenders. However, it's not too good. Our current or the interest cover is not too good. As I mentioned earlier, our current interest cover is just 1:1, which indicates that currently we are generating enough operating profits to cover our finance costs. However, if the finance cost increases in the future, we might face repayment issues, and this might deter access to short-term funding as well. So it all depends on the relationships which we have with our existing lenders. If we can take steps to increase our operating profits, we can make sure that our interest cover increases in the future. However, let's assume the board decides to opt for debt funding. When this is the case, the finance cost will increase. With that, even when opting for a short-term loan, we might struggle to secure a short-term loan given our current interest cover. All right, so that's my answer concerning the annual escrow management fee. So we can't utilize the working capital, which is the easiest thing to do. We don't have enough money. So the only option at our disposal is to opt for a short-term loan. Given our interest cover, the lenders might actually be they might not lend any money to us. Even if they do so, they will charge extremely high finance costs or interest rates, which will increase our finance costs. So we have to be ready for that as well. All right, so that's how you should structure your answer. Once you have developed the answer plan, then your next step should be to expand the answer plan in paragraph form. So this is how I've explained the answer as per the suggested answers which we have shared with you. So as you can see, there's no bullet points or single line sentences. Instead, everything is in the entire answer is in paragraph form, and each paragraph carries 2 to 4 sentences. All right, so that's how you should finalize your answer as well. And then the second subtask is based on how to deal with debt covenants. I don't have time to cover this element. Please go through this answer plan, then you'd understand how to tackle this type of a question. Okay, so that's what I wanted to share with you. I hope you gain a good understanding of how to deal with a question tied to long-term and short-term funding options, which will definitely be tested at your exam. It's one of the prime responsibilities as a senior finance manager to conduct evaluations concerning long-term and short-term funding options. All right, so we are happy to say that we achieved 92% pass rate in the previous sitting, and this student failed 4 times before utilizing our resources and achieved a pass, not just a pass, achieved 92 marks. So if you can achieve a similar feat if you utilize our resources. You saw how we conduct our master classes, what is covered within our master classes. So similarly, if you gain access to the master classes, then you will easily learn all theoretical elements. You will also learn how to apply these theoretical concepts when developing answers. And once you have learned these things, when conducting revision, try to redevelop answer plans and see whether you are capable of replicating TCS's answer plans or replicating what you learned via the master classes. Okay, so having said that, we are moving to the Q&A. So if you have any questions, you can switch on your mic and talk, or drop us a message via the chat. I'm going to pause the recording. All right, folks. So thank you very much for those questions. I hope I addressed everything. I love it when you guys are asking a lot of questions. So thank you very much for asking all these questions. And having said that, if you want to contact us, you can do it via our website, which is www.studyatTCS.com. Visit our website and click on the contact button and drop us a message. Our admin staff will get in touch with you via email during office hours, or you can simply directly email us at info@studyatTCS.com or WhatsApp us on this number. And I urge you to follow us on our social media handles, especially TikTok and YouTube, because via TikTok, you'd gain access to 6 videos, which is a good pre-seed mind map. Keep watching these 6 videos continuously until your examination, to make sure that you constantly keep yourself reminded of the most important points highlighted within the pre-scene. Similarly, you have access to a pre-scene mind map as well, which can be downloaded via our student dashboard. I've already shared it via the WhatsApp group. So I hope you go through this document as well to keep yourself reminded of pre-scene info. And the recorded versions of the weekly webinars and workshops are uploaded into our YouTube handle. And if you're yet to read our blog post, click on this button and read this blog post to get your bearings with the internals and externals of Leothayre, your chosen company. Having said that, it brings us to the end of the first workshop, which we have conducted, focused on your F3 syllabus, which is one of the tough syllabus areas which can be tested at the exam. So I hope you gained a good understanding of how to tackle a question tied to financing options, short-term and long-term funding options. And I hope you'd attend next week's workshop, which is focused on your P3 syllabus. And if you're yet to start preparations, you still have time. If you're planning to sit for exams happening in August, you have full 3.5 weeks at your disposal, which is enough and more time for you to complete all mock exams, watch all master classes, and conduct revision, thereby redeveloping answer plans. So start your preparations right now. Don't wait until the next week. Start right now. If so, you will have enough and more time to conduct all your preparations. So I wish you all the very best, and I hope to see you guys next week at next Saturday's workshop, in which I'm going to conduct a similar workshop focused on your P3 syllabus. So thank you for joining. I'll see you guys next week.